Did this budget fix the UK economy?
First of all, the UK economy doesn't need fixing. We're going to be paying more tax. The government's going to be spending more money. The net effect on GDP is de minimis. This government is a spendthrift government, as all Labour governments are. They like spending other people's money. This process is broken. The power invested in the OBR is excessive. I was right this year. I think I'll carry on being right. Maybe sounds arrogant. The economy will surprise to the upside.
If you'd been Chancellor, what would your objective have been today?
I would have been a bit braver.
Welcome back to Noise Cancelling, the podcast where we try to cut through the headlines and look at what really matters for investors. Today we're recording just after Rachel Reeves' second budget as Chancellor. The press will tell you what she announced. This episode is about the so what. I'm joined as always by Neil Woodford. Neil, we're going to talk about what Reeves is really trying to do, whether it can work, and what it means for you as an investor and for your strategies. Neil, before we get into the detail, can you give us the 60-second version of what this budget actually does?
Okay, let me try and condense it into 60 seconds. So, we'll be paying more tax. The government will be spending more money. No surprises there. This is a Labour government. This is what they do. As a proportion of GDP, the tax take rises to about 42.3% of the economy of GDP in 29-30. The government's borrowing figures have improved as a result of relative to where they were before. So I think the gilt market is relatively happy. Gilt market is up. So the outcome really of this budget is, in my view, a missed opportunity, but it doesn't change my economic outlook for the UK economy. We're going to be paying more tax. The government's going to be spending more money. The net effect on GDP going forward, in my view, is de minimis. And I still believe the economy, for good reasons, I still believe the economy will accelerate next year to 2% growth and average a higher rate of growth over the subsequent years than the OBR is currently forecasting, which is 1.5% on average over that 5-year period. Based on the forecast, the OBR is now projecting forward. Based on what we now know in terms of what extra spending is going to occur, based on what we now know in terms of what extra taxes are in place to pay for that extra spending, the extra tax in 29-30 will be, I think, 38.9 billion, and the higher spending is about 32 billion, in fact, in the same year. So the fact that there's a 6 billion or so difference between those two numbers, in other words, more tax receipts than the increase in spending, results in the greater headroom that she's got at the end of this period.
It wasn't exactly a smooth build-up to the budget. We had the OBR numbers leak before the speech even started. And as the tech guy here, I'm sure that someone at the OBR is having a really bad day. How does that kind of thing strike you?
It's sort of confirmed. I talked in a blog. I talked about the omni-shambles that is this process. This process is broken. It takes far too long. It takes 10 weeks for this sort of omni-shambles to come together in a budget speech. That's far too long. And frankly, I thought that it sort of marked an appropriate full stop to what has been a disastrous process once again. This time around, I think if anything, it's been even worse than it was in previous iterations. So it was a sort of fitting end to the omni-shambles. But importantly, and thank God, what the Chancellor did announce is that we're only going to have to endure this once a year now going forward. I still think it's flawed. I still think it takes way too long. I think the whole process is broken. The power invested in the OBR is excessive, but we are where we are, so we just have to endure it. But fortunately, we only have to endure it once a year going forward.
Well, let's talk about what Reeves is really trying to achieve with this package. Going into today, what did you think she needed to do with this budget?
Naively, maybe I hoped that there might be a sort of dawning of reality, and there might be some spending restraint, although I expected there to be tax increases. I hope that they would be more constrained than they've ended up being. The tax increases over the period, they're quite back end loaded, in fact. But they are larger than I would have expected and larger than I would have hoped. The increase in government spending this year is disappointing, and over the life of this Parliament, the extra spending is a headwind. I suppose I hoped that the lessons that she should have learned from the last budget and the last iteration of this, I think, broken sort of economic philosophy would have had an impact, but it appears not. But the reality is, and as I've said repeatedly, and maybe surprisingly to some readers and listeners, you know, I don't really think this changes very much at all. I think it's broadly irrelevant. I mean, it may sound extraordinary to say that, but I just think it's it's it just doesn't derail my view about the outlook for the economy at all.
Well, we now know the headline, about £39 billion of extra taxes by the end of the decade. In your view, what is she actually trying to achieve with that?
I think she's trying to deliver a Labour philosophy. Perhaps more cynically, what I think she's trying to achieve is she wants to stay in the job. She's been given a mandate by her Prime Minister, please, do something that will quell the backbench sort of impending rebellion. Let's deliver some sort of Labour priorities, because I think the heat has been on Keir Starmer, and indeed on the Chancellor. So I think she sought to sort of address that political issue head on, which I think she's done. That is quite a narrow constituency. I don't believe what she's done today will help the economy, even though I think she may well believe that it might. I think she feels that she's helped, poorer families. The child benefit cap's gone. The basic state pension's gone up by 4% or so, which is above inflation. Various welfare payments will go up in line with inflation. The minimum wage has gone up for 18 to 24-year-olds. Lots of people on lower wages will I suppose be pretty grateful for that. So I think to some extent, you can see how the political hue of what she's done has sort of met the expectations of her backbenchers. But as I say, for all the sort of the tweaking of this and there'll be a lot of heat and light around this budget. There'll be a huge amount of political commentary. The reality is, as I already said, I don't think it makes really that much difference to the economy as a whole. Clearly, it will impact individual businesses. There will, betting and gambling, online gambling, the duty's been doubled effectively to 40%. So clearly that has an impact on that industry. But in aggregate, it makes, in my view, very little difference to the outlook for the economy.
And how does the £39 billion figure compare with what you were expecting?
That's bigger. It's bigger. It's bigger than I thought.
But it's not as big as some forecasters in the media were talking about.
No, and the tax measures that she's announced are not as onerous as many in the media had been forecasting. Partly because, and here is the lesson for all those commentators who have just been calling, for the imminent demise of the UK economy. The economy starts this forecasting period much bigger than the OBR forecast. Growth this year has been much better than the OBR forecast. Therein lies the important lesson. If I'm right, and I believe I will be right, I was right this year, I think I'll carry on being right. Maybe sounds arrogant, but I think that I will be right again. The economy will surprise to the upside. The economy will deliver a better outcome. It'll deliver more tax revenue. It'll deliver better growth numbers, lower interest rates, lots of things that will, as we go forward, will make the budget arithmetic a lot better than they forecast, and may mean that some of these tax increases that are planned now but won't be implemented until later in this decade may not need to come through. Indeed, she may well be in a position, I think, to cut taxes towards the end of this Parliament.
If you'd been Chancellor, what would your objective have been today? And how different do you think your tax and spending mix would have looked?
I wouldn't have increased taxes at the last budget, and I wouldn't have increased taxes at this budget. I would have looked to control government spending. I would look to institute, lots of measures to reduce government waste. I would look to easy targets to reduce government spending. Well, I mean, I think there are easy measures. There are easy things that the government could do. Easy from an economic point of view, maybe harder from a political point of view, that she could have implemented that would constrain growth in government spending. Deregulation, for God's sake, let's have some deregulation. Let's have some tax simplification. Let's have more certainty about what we're doing in this whole budgetary process. Thankfully, I think we will get that going forward. But fundamentally, I'm an advocate of a smaller government, a smaller public sector, and through growth in the economy, liberating growth, liberating entrepreneurialism in the economy through deregulation, lower interest rates, and less crowding out by the government will create a healthier, wealthier economy, which, of course, in the process, delivers the resources that governments can use to improve public services. That's sort of fundamentally my philosophy.
Well, that's her ambition and the headline numbers taken care of. Let's take a look at where the story might collide with reality. We've had the OBR revising growth up for the year, and you've been very critical of those kinds of forecasts before. What's wrong with the way that they're looking at the UK economy?
They're looking through the wrong end of a telescope, I think. They go into immense detail, and I think there is there is an excessive reliance on the model. There is no judgment. No judgment at all. There's no judgment at the Bank of England, on the MPC. It's all academic economics. And there appears to be no judgment in the OBR. If you spoke to any businessman right here, right now in the UK, medium, small, large, what would be the first thing that if you ask them what are the things that you're sort of worried about, thinking about, if you think about your business over the next 3 years, the first thing that they would talk about is how can we make use, how can we become a more productive business by using AI? The OBR has just downgraded its growth forecast for productivity from, I think, 1.25% to 1% growth over the next 5 years per annum. Just at the time, I would think that productivity is about to be liberated by arguably the most significant industrial revolution the developed world has ever confronted or embraced, just as, in my view, economic growth is about to accelerate as interest rates come down after a long period of economic crisis after crisis. And we've had the financial crisis, we've had the pandemic, we've had the war in Ukraine, just as as the economy is about to settle in the wake of all of that and deliver what I believe we will see, which is lower saving and higher consumption, which will drive faster growth. Just as that will transform productivity outcomes, and just as AI investment will drive productivity outcomes, the OBR downgrade their growth forecast will downgrade their growth forecast entirely because they've downgraded their productivity forecast. It seems to me to lack any sort of pragmatic judgment. Somebody somewhere in the OBR has been put in a safe room, if you like, isolated from the world, and come up with an economic forecast that just makes no sense to me.
Well, they've also tweaked the inflation outlook higher
Yes.
next year, despite things like frozen fuel duty and VAT cuts on energy bills. How do you read that combination of assumptions? How does that make sense?
I just think they're wrong on inflation too. The OBR's inflation forecast has gone up from 2.1% to 2.5% next year. I think that's wrong. I think 2.1% might, on average for the year, might have been a little bit too low, but 2.5% in my view is too high. But I'm not going to die in a ditch over that. I would be lower. My view is inflation comes down. Well, it starts to come down significantly next month. And I think there are good reasons to expect inflation to continue to fall. It's not just a difference, I think, on energy prices. I think it's a product as well of what I see developing in the labour market with wage settlements, with the fall in vacancies. I think the inflationary pressure coming from the more normal sources of inflation are going to dissipate. But importantly, the base effects are very significant. Remember, last October's budget was pretty inflationary. As we annualize the base effects from that budget, you'll see, I think, a significant decrease in inflation. I'm reasonably confident that we'll have inflation by mid-year between 2 and 2.5%, and we'll exit the year, I think, at pretty much close to the 2% figure, which is the MPC's target.
Reeves made a big link between investment and productivity, and you've called that story entirely fictional. Can you explain why?
So she started off her speech making, the political point, which she sought to make, on numerous occasions, which is that 14 years of sort of Tory mismanagement. And she went on about underinvestment, and that underinvestment in the economy, effectively blaming the Tories for this so-called underinvestment, and then saying, well, underinvestment has led to low productivity, and low productivity has created this low growth scenario, and this is the sort of poisoned chalice that the Labour government inherited. The whole foundation of that argument is dishonest. Okay, it's fundamentally, quite clearly, a lie. The data, the facts are very different. The investment share of GDP is close to a 30-year high. Investment spending has been growing strongly over the last 5 to 10 years. And as I said, it is at a 30-year high as a share of GDP. Interestingly, since the pandemic, investment in the UK has grown in lockstep with government spending, which has been, as everybody knows, has been growing like a weed. What's remained very subdued through this period, and the reason that economic growth has remained subdued, is that household consumption or consumer spending has remained very, very depressed. I mean, in real terms, it's pretty much the same as it was back in 2019. Beyond that, of course, there is this idea that lower productivity must mean lower growth. Well, the correlation between productivity and growth is very low. If you try to predict what growth would be and you knew what productivity was going to be, you'd be wrong 2/3 of the time. The fact is that there is a very loose and very discontinuous relationship between productivity and growth. The other point to bear in mind is that the ONS has had real problems calculating productivity in the economy for years, not least because they struggle to know what output is, and they really, really struggle to know how many people are employed. This idea that investment spending has been depressed, wrong. The ONS, the OBR, haven't got a clue what productivity is. I just think the whole argument is flawed, fundamentally flawed. They can't measure it. The correlation is loose at best, and the investment share of GDP is at a 30-year high. None of what the Chancellor said in the House of Commons today about investment, productivity, and growth is true.
Many of her heavier tax measures only bite towards the end of the 5-year period that she's talking about. Does that tell you anything about her real strategy?
Yeah, I think in a way she sort of listened maybe to some more sensible voices. I think what she's done is reasonably astute in some respects, in that clearly this government is spending more money. She's understood that she needs to head off any potential criticism in the government bond market. She's sort of soothed that potential problem by delivering significant tax increases. Ultimately, comes of course after the additional 40 billion was raised last budget, but it's back end loaded. The extra tax hits towards the end of the period. So without undermining the OBR, without confronting that potentially political and market headache, she's sort of managed to maneuver herself into a space where she can reverse engines on some of those tax increases if the growth outcome is better, which I am very confident it will be.
Well, it seems like maybe her faith in the OBR is not going to be at an all-time high after this morning.
No.
Let's move from the macro story to some of the specific tax and policy changes that really matter for investors. But a quick pause before we get into that. If you're listening to this and you're new to noise cancelling, W4.0 is the platform that Neil and I have built to share Neil's investment strategies and the thinking behind them. Members can see the strategies that Neil runs on the platform, track his positioning over time, and read his regular commentaries on markets and the economy, including budget days like today. We don't give financial advice, but if you want a deeper view of how Neil creates investment strategies, there's a link in the show notes and the description below, including a special offer for podcast listeners. The first 50 of you to claim the offer will receive 40% off your first subscription. Right, back to the budget and what it actually means for you. Neil, let's unpack some of those extra tax pounds. Who's really paying for this budget?
Everybody in employment will end up paying for it. The freezing allowances, personal allowances, means that effectively there is a sort of stealth income tax increase. Everybody in employment pays that higher tax. On top of that, she has increased by 2% the tax on income from assets. So landlords and investors will pay 2% more tax on the income they receive from property and from their investments. So that's something of a tax grab from people in work and from people with financial assets and property assets. She's raised money from people who like to gamble, a significant increase, particularly from those who like to gamble online. The duty's been doubled, effectively from 21 to 40%. She's going to raise additional tax from levies on the higher council tax bands. I think the top three will so there will be an additional annual tax effectively for people who live in houses worth more than 2 million quid, wherever they are in the country. And that's a sliding scale from £2,500, I think, up to £7,500. EVs, because they don't pay fuel duty, arguably don't pay for the wear and tear that they inflict on the nation's road infrastructure. So she's basically said there'll be a new EV tax. So there are lots of little measures like that, which added together, alongside those other bigger measures which I've mentioned, give her the additional 38.9 billion of tax in 29-30.
One of the more striking measures is the 2 percentage point increase in tax on dividends, property and savings income. How do you view that one?
Some might see it as a sort of soft target. I see that very much as double taxation. I think for most people, their savings, they save after their income has been taxed, and now they're paying a high rate of capital gains on any gains they make, thanks to the last budget, and now they're paying a higher rate of tax on the income that they achieve from their savings. You might argue in an environment where, for example, the economy was in a hole, and government revenues had fallen, and there was a crisis unfolding, and you think, well, where can we raise money? We don't want to drive the economy further into the hole. Where can we look to raise revenue? You might argue in a circumstance like that, you might increase taxes on investment income. The Chancellor justifies this additional tax. She talks about hard choices, and she talks about those with the broadest shoulders, shouldering more of the burden. But the fact is that she's chosen to spend more money as a chancellor. This government is a spendthrift government, as all Labour governments are. They like spending other people's money, and the fact is that they've got to go after those who are relatively better off to pay for the additional spending. And that's what we've seen in this budget. And I suppose ultimately the political argument is are those with the broadest shoulders already shouldering enough of the burden of taxation? I would argue that they are. But she needed to raise some money from somewhere, and those people who are relatively well off, not the super rich by any means, but who are relatively well off with savings, are the people who will end up paying for this budget. There's one other measure as well which will affect people, which is the salary sacrifice measure on pensions.
I wanted to ask about that. What kind of signal did that one send to you about long-term saving and investment?
I don't think it's going to change saving behaviour, but I suppose at the margin, if it does anything, it might put people off putting as much as they might otherwise have done into their pension schemes. It might put people off saving as much as they might have done otherwise. So, typically economics tells you if you tax something, people demand less of it. If the price of something goes up, the demand tends to decline. So it seems to me that given the tax on saving has gone up, people might actually end up doing less of it. Well, the fact is that my sort of economic view going forward is that households will be saving less and spending more anyway. So this might just act as a further incentive to do the thing that I think they're going to do anyway.
She clearly wanted to show that she cares about the UK equity market. We've got some reforms to the ISA regime and some other market-friendly touches. Do any of those measures meaningfully change the outlook for the UK stock market?
No, I think they're relatively trivial measures. I mean, I'm pleased that she's acknowledged that there are things that the government can do to help, but the really big things that they could do that could really make a difference have not featured at all in her shopping list of measures.
And nothing in this that would make a serious difference to the prospects for UK equity listings, for example?
I don't think so, no.
What would she have had to have done to achieve that?
This is quite a controversial view. If pension funds in the UK benefit from significantly expensive reliefs, the quid pro quo must be that those funds look to own a minimum percentage of the UK of their investments in UK equities. I don't understand why they're allowed, for example, to own pretty substantial investments in international equity markets, but their domestic equity exposure is virtually zero. I mean, it's a little bit above zero, but it's dwarfed. Their domestic equity holdings are dwarfed by their international equity holdings and private equity holdings. And I'm not sure that's justifiable. So I would have been a bit braver. Now, it's a controversial measure, and lots of people don't like being told, well, you shouldn't mandate where they can invest. I'm not so sure that logic or that argument stands up, frankly. Anyway, so I would do that. I would reform regulation. I would roll back many of the aspects of MiFID II, for example, which I think has massively undermined and harmed the UK equity market.
When you look at your UK strategy on W4.0, all-rounder, does anything in this mix make you want to change what you've included in that?
It's a little early. I mean, I don't want to shoot from the hip. I want to sort of assimilate what I've learned so far. I'm sure there'll be other things that I've missed. There are other things that it's a 200-page document. So, and I haven't read it yet.
Even though you had a couple of extra hours before the budget was announced.
Well, not quite extra hours, but I had maybe a half an hour to an hour. There were a few things that I was aware of before she stood up that were coming. So I haven't had time to sort of fully assimilate 200 pages of document. But nevertheless, at the moment, I don't think it changes anything. As I've said, many of the measures I anticipated and wrote about, some weeks ago. The scale of the tax increases that are back-end loaded are larger than I would have thought, but there's not much that's surprising me in this budget. The one thing, actually, I think she could have done that would have, I think, been a sort of good news sort of gloss. I think if she had used the extra tax that she is levying on people who live in larger, more wealthy or more expensive houses. If she'd have used that tax to abolish stamp duty for first-time buyers, I think that would have been a sort of very big sort of positive win for her. But she's not done that, and the two numbers would have been about the same. So that's a missed opportunity in my view. But nothing I heard today really changed my view. It was broadly consistent with what I expected before. The OBR's numbers are broadly in line with what I expected. There's nothing here that changes my view.
Which sectors come out of this looking better or worse in your eyes?
Most of what I think almost all of what she has said was flagged beforehand. I don't think there was anything that surprising in the budget. And by definition, share prices had already adjusted to reflect what she has now announced. Maybe the absence of some things that people were worried about might be taken positively. As I've said, it's a little hard to sort of be too definitive about because I haven't assimilated everything. But broadly, I don't think there are any sort of upside winners or or particularly any sort of significant downsides from this budget, over and above what we already knew.
I mean, the immediate market reaction seemed to be broadly positive from the share prices I was looking at. But
yeah, this morning the market went up on the leak, was down. The equity market was down in the early part of her speech, and then has rallied a bit in the aftermath. The gilt market was down initially, but then 10-year yields fell, prices rose towards the end of her speech. So broadly, but not significantly. So I don't think there was. I think maybe the absence of things that I think some commentators were worried about may actually have more of an effect than actually what she said. The one thing I suppose, if you said, what are you disappointed? What's disappointing? I mean, the whole bloody thing has disappointed me, but the absence of that stamp duty, that cut in stamp duty for first-time buyers, is something that I think wouldn't have cost really. I mean, it would have been a rounding error in the budget arithmetic, but but I think it could have been taken very positively by the economy, by the house building industry, and of course by the house building sector.
okay, well, that's the impact on investors and on your strategies. Let's finish with the bigger question. And what does all of this mean for the UK's growth story from here? Has any of the UK's growth trajectory actually changed?
No, not in my view. No, not at all. I'd be very surprised if with further examination of the measures, that my initial reaction, which is it makes absolutely no difference to my economic expectations and my growth forecasts, initial reaction, I think, will be reaffirmed the more I get into the weeds.
Is that because you started with a broadly more positive view? Do you think maybe this will change the view of the doomsayers, perhaps?
It might a bit. I mean, the doommongers are politically motivated, I think, in many respects. I think they're also they just seem to have a sort of predetermined sort of negative perspective on the UK economy and the UK stock market. I think it'll be hard to to push them off that course. I don't think this budget will do that. It's not as sort of negative as many of the commentators said it would be. I mean, let's not forget. I mean, the National Institute of Economic and Social Research said there was a £50 billion hole in the budget which needed to be cured today. That, I said at the time, was ludicrous, ridiculous, and so it's transpired. But at the margin, I think the more lurid, the more scaremongery sort of commentary looks to me like it might have to be detuned a bit.
Do you think Reeves' approach improves the 1.5% growth forecast, or do you think it's likely that more likely that 1.5% growth forecast will be achieved?
The OBR's forecast of 1.5% will, I think, be exceeded by the UK economy, but it will have absolutely nothing to do with anything that she's announced today.
So we're now moving to a once-a-year budget process rather than these repeated events.
Mm-hmm.
I know you welcome that change.
Yeah.
Do you think it's going to lead to better economic policy?
I think it might. Yeah. This process that we've been through just highlights how ludicrous, how damaging, potentially damaging this process is. No other country does it like this. I've described it as an omni-shambles. I think I was not as cutting as I should have been. I mean, it ended today with a budget leak, the first in history. But, basically the budget speech, the 200 pages were online between half an hour and an hour before she stood up. I mean, what a catastrophe. But it provided an appropriate full stop to what has been and is a ludicrous process, and it needs to end. And we need to move to a different, more organized, less long drawn out, less sort of arcane process.
Looking ahead over the next few years, what are the key signposts you're going to be watching to judge whether her strategy is working?
I'm not sure she has a strategy. It's really, really important. I think we need to understand the fundamental limitations of what she's able to do. Her strategy is really, if I was to summarize it, it is levy taxes on relatively wealthy people and on those in work, and spend that money on the things that Labour governments have always traditionally wanted to spend money on. Public sector, increasing public sector wages, benefits. That's her strategy. It's almost isolated from the economy. The economy will do what I think it will do, despite the handicap that it will have to live with, which in my view is the government's sort of tax and spend policy. But it is not what I want people to understand, and what I think they should get into perspective is that her tax and spend strategy is not going to undermine the trajectory of the economy.
Last question. Did this budget fix the UK economy?
First of all, the UK economy doesn't need fixing. There are lots of things that could be a lot better. But the idea that the UK economy needs fixing is a lazy, sort of consensual sort of media story. Okay, and it's designed to encourage people to believe that the UK economy is in some way, shape, or form. I have to use the word okay? It isn't. The UK economy has been through a prolonged period, crisis after crisis after crisis. The governments that oversaw those events, I think, mismanaged them spectacularly. In my view, COVID was spectacularly mismanaged. Lots of damage was done. But finally, my view is at last we are emerging from that sort of prolonged crisis period, which is really, I mean, I would argue that it really started with the financial crisis in 2008, 2009, but some people would disagree with me. I still think we bear the scars of that. But the more recent crises of COVID and the COVID and the war in Ukraine were massively significant events, but they are now behind us. The inflation and the interest rate issues that flowed directly from the energy price crisis which followed the war is now behind us. Many of the things that the economy has had to grapple with through that period, we are emerging from. So the narrative that somehow we're sort of perpetually sort of disabled by something that's structurally wrong with the UK economy is wrong, in my view. We are emerging from a prolonged crisis period, and as a result of that sort of transition, we will start to normalize as an economy with less saving, more spending. That will drive higher growth in the economy. That will higher growth in the economy, more growth from the private sector will transform public sector finances. Lower interest rates, lower inflation are the facilitators of that transition. And I'm not sure anything that the government is doing now can derail that process. And all you need to do is look across the Atlantic and see why, or I'll try and understand why the US economy has outperformed its Western European peers. Why is that? And I think there are very clear reasons why. Not everybody will like those reasons, but if people want higher growth, then they should look to the US economic model and tell me why that would be so bad for the UK. Having said that, I think the as I've said, the prolonged period of subnormal growth, which has been caused by the events that we've been through, are now behind us.
Well, let's hope so. Neil, thanks as ever for your time, for helping us make sense of what has been a very noisy budget day. If you found this episode useful, please make sure you're subscribed to Noise Cancelling so you don't miss any future episodes. You can leave a like on this video if you enjoyed it. And if you've got any questions for Neil about the budget, please leave a comment below and we will answer those as quickly as we can. If you want to see how Neil has built his investment strategies, head to W4.0 via the link in the show notes and the link in the description below. Thanks for listening. Until next time, take care.